there's cash hitting my investment portfolio every month, not just from my deposits, but from those dividends. Today, we're going to be talking about Main Street Capital, a monthly paying dividend investment that I've been holding for the last few years. It's been paying steady dividends since 2007, never missing a payment. We'll take a look at the Q3 2025 payout and a ton of other details about this investment. If you love passive income, get ready for this breakdown. I am Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell. Now let's get started. Why is Main Street Capital such a big deal? It's a BDC, a business development company. You can think of it like a bank that lends cash or buys small pieces of businesses. This helps those companies to grow. Then they share the profits with you and me, the shareholders, through those dividends. When it comes to BDCs, they must pay out 90% of their income to avoid extra taxes. So the result for us, the shareholders, is a higher dividend around 7% yearly. People love Main Street Capital. They pay out their dividend on a monthly basis, not just quarterly, like many of my investments. They've been reliable about paying out their dividend even through shaky markets. And of course, by reinvesting those dividends automatically, you are building up your position. But with those high rewards also comes some risk. So drop me some comments. Let me know. Are you holding Main Street Capital? What is your favorite monthly paying dividend investment? Or are most of the ones in your portfolio quarterly paying? Whichever. What's your favorite? Main Street Capital. They help small businesses with revenues of about 10 to 150 million by lending money or taking a small ownership stake in their companies. So by doing this right now, Main Street owns a small piece of about 187 companies spread across different industries like tech, healthcare, and even the food industry. This allows them to pay out that steady monthly dividend of about 0.255 per share, which is up 2% from last year. And they've been steadily paying an extra dividend of 30 cents per share in order to keep them on track to hit that 90% payout rule. So that brings the total up to 0.765 per share, or about 7.7% yearly. The current stock price is $56.48. It has come down over the last few days. The share price was dropping even before Friday's tariff announcement on October the 10th by Trump against China. So over the last 5 days, the share price is down 8.29%, but on the day, it's up 2.50%. If we zoom out to some further out time frames, we can see that Main Street is up 6.5% over the last 6 months. Over the last year, it's up 10.64%. And over the last 5 years, it's up 88.50%. And the year range on the stock price has been between $47 and $67.77. And when it comes to the dividend, they've never cut their monthly dividend in 18 years since their IPO back in 2007. Having a higher dividend is great, but there is also some risk. Main Street lends to smaller businesses. So if the economy has a strong pullback, basically hits a recessionary period, some of those companies might not pay on time. They might default on their loans. And so, of course, this will hurt their profits. But when it comes to Main Street, as of Q3 2025, they were only showing 0.5% bad loans on their books, which is extremely low. So when it comes to Main Street, the defaults are low, but we have to keep an eye on it. Each time they share their earnings and details about the company. Another concern that investors have had about Main Street is that the stock has been trading at a higher premium. Basically, the stock price was exceeding the net asset value by about 0.5%, which is small, but many were probably holding off on buying at these higher prices because they didn't see the potential of the gains with that higher valuation. Another concern is If the interest rates jump, Main Street borrowing costs will also rise. And that will be another thing that can eat away at those profits. But even through those rough times like 2022, Main Street has been able to keep up with their dividends without interruption. Here's a look at my dividends received year to date. And you can see on the quarters, March, June, September, my dividend is larger because we're getting that bonus, 2 dividend payouts during those periods. My last dividend payment was $23.40. And as of the time that I'm filming, I'm currently up 32.04% and holding close to 43 shares. And my current average is $42.79. So when it comes to Main Street Capital, it's a small position that I'm holding in my taxable accounts. I've been enjoying receiving those steady monthly dividends, and I'll be on the lookout in November when the next earnings come out. But since I've been holding, it has not been a disappointment for me in my portfolio. I pair it with my ETFs like VTI, as well as my growth stocks like Google, Amazon, Nvidia. In addition to the growth that I've gained on the share price, it's also been great receiving that steady, consistent, larger dividend payout even through the rough times. They've proven themselves and overall are seen as a pretty safe investment, even through tariffs, shutdowns, all the things that can shake up the stock market. I've been holding for a while. My average is a bit lower, but if you're considering it, do your research, consider your comfort level, and decide if you want to incorporate this or add to your position once that share price is in line with your goals. Thanks for watching. Make sure to leave me some comments. Let me know your thoughts on this monthly paying dividend investment. If you haven't already, make sure to like, subscribe, hit that notification bell. You can support the channel by joining channel membership and make sure to check out my referral links. Okay, bye.